So if you've been watching financial news or your favorite financial YouTuber, you probably already know that the stock for Tesla has gone straight to the moon. Is it a bubble, however? Turn your FOMO into fear of missing out of this video and stay locked in. What's up, everybody? Welcome to BTP Fusion. If this is your first time here, welcome. I think you'll like it. If you're coming back, you know how we do it on this channel. Let's dive right into the content, shall we? The latest news from Tesla is not only proving all the haters wrong, it might just be defying the laws of finance physics. If you've been paying attention, did you know that Tesla has been on a rocket ship recently? And specifically since June 2019, it has almost quadrupled its stock price. On February 4th, 2020, it peaked at about $961 per share, and it closed at $887.06 per share. Now, even if you factor in sharp retreats of the stock that have occurred for the last couple of weeks, results of people taking the profits from the rise. Graham? Then Tesla shares have spiked roughly 75% into this new year. After closing up $887.06 on the 5th of February, Tesla was up 2,519% since the end of 2012. In other words, if you had invested $5,000 in Tesla when it was first available and did nothing but leave it in there, that same $5,000 will be worth, as of the 5th of February, $130,950 today. Mind-bending stuff. If you left the initial investment alone and purchased more stock again during the dips in the stock, you would have made even more money. Some analysts say that the stock could hit $1,000 per share. Others, Tesla haters as some would call them, are quickly encouraging everyone to pump their brakes. They have rightly noted that there are some issues that will need to be resolved. So before we go any further, a little bit of full disclosure is required on my part. No, I do not own any stocks in Tesla. I did want to buy in May of last year, but was spooked away a little bit by all the recession talk, and instead decided to hold firm and continue with my 4-fund index strategy, and decided not to hold any individual stocks for just a little bit longer. I honestly thought we were going to enter into a bear market of some sorts, and was waiting for a better buy opportunity. That kind of goes to show you that timing the market can be a very difficult task to undertake. And if you believe in a stock or a company, you might as well just purchase it and invest in it when you can. Sidebar notwithstanding. Some feel as though Tesla's rise is another example of irrational exuberance inspired by an unprecedented wave of easy money from central banks. Michael Hartnett, Bank of America's chief investment strategist, is one such person. He says excess liquidity to combat deflation continues to fuel twin bubbles in scarce yield and scarce commodity assets. Other investors are likewise skeptical of the sustainability of the current price of Tesla. As an example, the Bespoke Investment Group. In their report this week, they called the Tesla move a bubble-style gain that is defying all rhyme or reason. Some analysts from that firm provide data to back up that point. Quick example, it has taken Tesla fewer trading days to hit the 2,000 threshold than it did for the broader technology sector bubble that popped in the late 90s. Similarly, for home builders stocks during the early 2000s. Same thing for the biotech boom that began in the late 2009. Only Yahoo and Cisco hit the 2,000% gain market quicker. As you might imagine, each of those bubbles popped, and the champagne showers quickly turned into tears of sorrow for investors in each of those sectors. In most cases, followed by an economic recession, as a matter of fact. When investors realized that tech stocks were way overvalued, the party was over for them. Home builders came back to earth after the housing crisis and subsequent recession, and biotech stocks cooled off after the Federal Reserve and politicians addressed concerns they had about the sector. That stated, and to defy that analysis, Tesla isn't a market sector. It's an individual stock. An individual stock capitalizing on a growing trend. That trend is that the public wants, nay, demands, electric vehicles for varied reasons. Among them, less reliance on fossil fuels with their number of problems, both environmental and geopolitical. And what's more, Tesla's finances have improved to a large degree. As an example, last week, Tesla posted its first annual adjusted profit ever, providing further momentum and giving credence to the position it holds as the second largest car company behind only Toyota. Not only that, but Tesla predicted it will be consistently profitable going forward. The electric car maker's sturdier financials have silenced critics who warned it would run out of cash and file for bankruptcy. The start of production at the plant in Shanghai has excited investors about the ability to ramp up sales in China, a crucial market. This enormous rally in Tesla, one of the most shorted stocks in the market, has caused serious pain to the company's many skeptics, has caused serious pain to the company's many skeptics. As of February 3rd, Tesla's short sellers have lost $8 billion on the stock this year alone. Now, to understand how short sellers could lose money on this, you need to have a little bit of a grasp on short selling strategy. And really, what is short selling? Basically, when an investor shorts a stock, they're effectively borrowing shares from a broker and quickly selling them with the goal to repurchase those shares when the stock is lower, keeping the difference and giving the stock back to the broker. Basically, selling high and buying low. A fundamental principle of all types of investing. Well, in this particular instance, Tesla's rapid rise has caused what's been known as a short squeeze, where bearish bets, people who bet that the price of Tesla is going to go lower, get quickly sold to avoid even larger losses. Doing that, in turn, propels the stock price even higher. This phenomenon has played out in an extreme way with Tesla, exacerbating the stock rally, much to Elon Musk's delight. Nobody knows if people will look back at this moment and see it as a prime example of a massive bubble towards the end of a bull market, or as a prime time to get into the Tesla stock. In either case, Tesla shareholders could be in store for a roller coaster ride. Bespoke goes on to say, taking either side of this trade at this point is a dangerous game. So we'd keep any trade small or simply enjoy watching the drama from the sidelines. The truth is, both sides of the Tesla debate have legitimate reasons for their positions. Tesla bulls think that Tesla is in a prime position to take advantage of this trend in electric vehicles, and that its name recognition and star power are enough to ensure that it will become successful. Others feel that more established car manufacturers will eventually catch up to the innovation that Tesla is bringing to the table. And the legacy automakers, with their brand recognition, fueled with advanced technology, will propel them past Tesla. Let's quickly take a quick look at both arguments. On the positive side, Tesla is positioned to benefit from its robust product pipeline. As 2019 came to a close, Tesla started production of its China-made Model 3 at a factory in Shanghai. That said, production is currently paused because of the coronavirus outbreak. The new factory, which was built less than a year, positions the company well to cater to the world's largest auto market. In addition to that, the automaker's Model Y crossover is coming to market sooner than originally planned, with deliveries starting in the first quarter of 2020. Then, of course, there's the Tesla Cybertruck and Tesla Semi, both of which are in development but are expected to hit the market in the coming years. Now, those are great reasons for exuberance, but does that justify the stock price and valuation? Remember, if and when everyone figures out that its current price isn't justified, it'll come falling back down to earth. Tesla's stock valuation after its torrid run-up means shares are pricing in exponential business growth for years to come, leaving little room for error. Currently, Tesla trades at about 120 times 2019's free cash flow. While growth stocks, like Tesla, should trade at premium valuations, this is particularly high, especially for a company in a capital-intensive industry. For Tesla to trade at a more reasonable price with a free cash flow ratio of around $20 in the future, free cash flow will need to increase nearly sevenfold. Even if Tesla can grow its annual free cash flow to $7 billion, it could take much longer than investors expect. The capital-intensive nature of the auto business may make profitably scaling operations more difficult than anticipated. Furthermore, future competition in the space could prove more formidable than expected. But what if it can meet all those lofty expectations and more? As it turns out, winners often keep on winning. If you consider disruptive and innovative companies such as Amazon, Facebook, Apple, Netflix, etc., shareholders willing to hold these companies for the long haul, even through all the periods when they were considered overvalued, were rewarded handsomely. Indeed, maybe Tesla continues to widen its lead in fully electric vehicles and the global automotive market hits a tipping point in which consumers begin adopting electric vehicles en masse. If that happens, not buying at $700 would be a massive mistake. If we consider both Tesla's speculative valuation and the fact that disruptive companies can sometimes greatly exceed expectations, investors thinking about taking action on Tesla stock may want to exercise the privilege of staying put and doing nothing. Now, no one knows with certainty whether it's best to buy, sell, or hold Tesla stock today. It's possible that the shares could fall sharply, leaving shareholders feeling as if they missed a great opportunity to take profits. On the flip side, providing an opportunity for those that believe that the company is worth quite a bit and will eventually exceed all expectations to buy stock while it's low. Investors, folks like you and me, only have a limited amount of information in front of them. Information in this case that makes it unclear what action you should take. Tesla is growing rapidly, and management is executing with more precision, including Musk. Yet, the stock's valuation prices in more extraordinary growth, which could be realized but may also prove to be far from reality. So, the most prudent thing would probably be to do nothing. Stay on the sidelines if you're already there and hope for a better buying opportunity in the future. If you're a shareholder, tune out the volatility and hold on to your shares as long as the underlying business is meeting or exceeding your expectations. Either way you go, it's clear to me that Tesla is indeed here to stick around for the long haul. It has proven that it can make electric cars profitably. It has growth plans for China and other markets. And so far, it has been able to stave off the competition from other car makers who are behind in the competition for battery-powered vehicles. Tesla's future looks bright. But the next couple weeks or so, we'll probably see investors selling their stocks to lock in their profits. If that is the case, it might be the perfect opportunity for you to pick some up yourself. With all that said, let me make it clear to you, I'm not a financial advisor, and you should consult a certified financial planner for any and all investments that you are considering. This video is for entertainment purposes only, and you should not listen to YouTubers for advice on how to handle your money, ever. Clear? Great. Take a look in the description for links to great articles on the topic, and stay locked in as we deliver new videos every week on the topics of business, finance, and technology. So be sure to click that like button for the YouTube algorithm to help our channel reach like-minded folks. And do not forget to hit the subscribe and notification bells so you don't miss out on a pulse-pounding second of the action. We'll catch you next time. Take it easy.